Fundamental analysis of stock market. Financial statements. The first step in fundamental analysis is to examine a company's financial statements, which include the income statement, balance sheet, and cash flow statement. These documents provide insight into a company's revenue, expenses, assets, liabilities, and cash flow. Industry analysis. The next step is to understand the industry in which the company operates. This includes examining the current market trends, competition, and regulatory environment. Management quality. The quality of a company's management team is critical to its success. Investors should assess the experience, track record, and reputation of the company's executives. Valuation metrics. Fundamental analysis also involves calculating various valuation metrics such as price-to-earnings ratio, price-to-book ratio, and dividend yield. These metrics can help investors determine whether a stock is overvalued or undervalued. Economic analysis. Finally, investors should consider the overall economic environment, including interest rates, inflation, and unemployment rates, as these can impact the company's performance. Importance of fundamental analysis in stock market. Fundamental analysis is an essential tool for investors to evaluate the value of a stock and make informed investment decisions. It involves analyzing a company's financial statements, such as its revenue, earnings, assets, liabilities, and cash flow, to determine the company's financial health, growth prospects, and future earnings potential. Fundamental analysis can provide investors with a better understanding of a company's operations, management, and competitive environment, which can help them make informed investment decisions. By using fundamental analysis, investors can identify companies with strong financials, growth potential, and attractive valuations, which can lead to higher returns on investment. However, it's important to note that fundamental analysis is not the only factor to consider when investing in the stock market. Other factors, such as macroeconomic trends, industry trends, and market sentiment, can also affect stock prices. Therefore, investors should consider a variety of factors and use a combination of fundamental and technical analysis to make informed investment decisions. Technical analysis in stock market. Price charts. Technical analysis involves studying price charts to identify patterns and trends that can provide insight into future price movements. This includes analyzing various chart patterns such as support and resistance levels, trend lines, and chart indicators. Technical indicators. Technical analysts use various technical indicators to help identify trends and patterns in the market. These indicators include moving averages, relative strength index, and stochastic oscillators, among others. Volume analysis. Technical analysis also involves analyzing trading volume to understand the strength of market trends. High trading volume during an uptrend is generally seen as a positive sign, while low trading volume during an uptrend may indicate weakness. Market sentiment. Technical analysis takes into account the psychological factors that can influence market movements, such as investor sentiment, market psychology, and investor behavior. Technical analysts look for signs of bullish or bearish sentiment in the market to determine potential price movements. Importance of technical analysis in stock market. The importance of technical analysis in the stock market depends on whom you ask. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. Some investors rely heavily on technical analysis to make trading decisions, while others place more emphasis on fundamental analysis, which involves analyzing a company's financial statements and economic conditions. Proponents of technical analysis believe that market trends, price patterns, and other technical indicators can provide insight into the direction of a stock's price. They argue that these factors can help investors identify profitable entry and exit points and manage risk. Technical analysis can also be helpful in identifying trends and potential turning points in the market. On the other hand, critics of technical analysis argue that it relies too heavily on historical data and does not take into account the underlying fundamentals of a company. They argue that technical analysis can lead to false signals and that relying solely on technical analysis can be risky. Ultimately, the importance of technical analysis depends on the individual investor's trading style and investment philosophy. Some traders may find technical analysis to be a valuable tool, while others may prefer to focus on fundamental analysis or a combination of both. It's important to remember that no single method can guarantee success in the stock market. and that investors should always do their own research and exercise caution when making investment decisions.